Today we are joined by Philip Noblet, Head of UK and Ireland Investment Banking at Jefferies. Philip has spent more than 3 decades advising companies and boards across M&A and capital markets, leading major franchises both in London and New York. A law graduate from the University of Cambridge, he began his career practicing law at Slaughter and May before moving into investment banking. He went on to hold senior roles at Deutsche Bank and Lehman Brothers, and later spent over a decade at Bank of America Merrill Lynch, where he was the chairman of EMEA mergers and acquisitions. Before joining Jefferies in 2018, he served as vice chairman of global banking HSBC. Philip, thank you very much for being here. It's a pleasure to have this chat with you. How are you?
I'm great, great. Thank you for inviting me. It's a pleasure to be here.
Thank you for making the time. So let's start off. Let's go way back and ask you about your time at Cambridge. So you read law at Cambridge, and then you
Yeah.
went to Slaughter in May. What first drew you to law? Why law? And then how come you moved to investment banking?
Uh, so the law thing is a terrible thing to say. In 1988, when I graduated, it just you were a lawyer, so you read law, so you went to be a lawyer, and the law firms were rapidly expanding. There were a lot more of them, so there were lots of jobs, and it's incredibly more difficult now. And so I was slightly reluctant to tell it that way, but it just was. You read law, so you became a lawyer, and I got really lucky because I didn't know. In the same way when I from Bury in the northwest of England. I went to Bury Grammar School. I didn't know the difference between any of the Cambridge colleges. Just happened to get lucky and apply to a manual. I happened to get really lucky and get into Slaughter and May. I didn't know the difference between a Magic Circle law firm and I don't, who knew? But obviously there's a big difference. And Slaughter and May was and still is an incredible law firm, full of very, very bright people. Really tight partnership, represents the vast majority of the FTSE 100 and just really amazing people to learn from. And I went to Hong Kong for 6 months as part of my articles, as they were called then, and so yes, it was an incredible experience. But I've told this story before, but I'll tell it again. So why did I move into banking? Well, I was in Hong Kong. I had a great friend I'd been at Cambridge with, and he was an investment banker. He was at HSBC in Hong Kong, and he got paid a lot more than me. And I was like, wow, he doesn't do any more. I work harder than him. And then I did this. Fortunately, I got hired to do a transaction with a UK conglomerate called Williams Holdings, which is a very famous and one of the UK conglomerates who were around. There's them, and there was Hanson, and but there were three very dynamic partners that basically built up this public company, and they made a bid for Raycor Electronics, which is the precursor to what is now Vodafone. And it was a hostile bid, and Slaughter and May were on the had always done all the legal work for Williams, and what was then called Morgan Grenfell became Deutsche Bank. They've been hired by Williams because their normal advisor Schroders was conflicted because they were on the other side. So again, it's a bit sort of multiple sliding doors moments in my career. And I got started on this deal. A wonderful partner called Frances Murphy. She was amazing. I learned so much from her. Sadly, left us too soon to cancer, but she was amazing. And she's like, this is it. You just qualified as a lawyer. Let's go. You're going to be. This is your deal. So I got to meet these bankers. Hostile deal, very exciting stuff. And our hostile deal got rejected. And so we decided to change the terms of the offer. And there was a guy that I was also at Cambridge with, and he worked on the Morgan Grenfell team, on the Deutsche Bank team. And it's about 2:30 in the morning. We're in the basement, meeting room at Morgan Grenfell. And he got up to leave. And I said, "Where are you going? We aren't finished yet." And he turned to me and smiled, and he said, "No, I've finished. You haven't finished yet." And I was like, "This is nuts, man." I was like, I could do his job, and I was a mathematician at school, so I knew I could add up. And most lawyers, they struggle to make the transition because they can't add up. With the greatest respect to all lawyers, but that is typically the issue that banking has with lawyers. And so the next day, I said to the lead guy on the deal team, I said, I kind of like to be an investment banker.
Hmm.
And he said, sure, come in and have a chat. So I went in and had a chat, met about 10 people. 2 days later, they said, right, here you go. And I said, great. And then they said, here's what we're going to pay you. And I was like, wow, that's like 50% more than I make right now. And by the way, that was about 10 grand I was making right then. So it was, but it was a lot. It was a huge amount of money. So to me. And so I still had an overdraft from college. So it was good. But so yeah, so I left, and Slaughter May went nuts, and the senior partner phoned up the head of investment banking at Deutsche and Warren Grenfell and yelled at him and said, "What are you doing, stealing our people?" And then, but if you ask my friends at Slaughter May there now, they would say I was a crappy lawyer. So, but so they were probably right. Yeah, so I moved over, and we joined one of the corporate finance teams, and then yeah, the rest is history, really.
That's great. I'm sure you've not looked back since, and I like how there are two sides to each story, but I think I'll take the first side, the one
Yeah,
from.
yeah, that's okay.
So when you made that shift from law into banking, what did you have to unlearn skills wise, and what did you have to learn sort of quickly into the new environment?
Oh, so I was I was pretty good at maths, and and spreadsheets, whatever people tell you, spreadsheets are just they're just maths, they're just interconnected cells, and so if you can add up, you can do a spreadsheet. We like to, especially analysts, and I can see a bunch of them outside this room. They're looking at me like, "You better say nice stuff about us." And then there's a great mystique about the art of modeling. There is, but it is a great skill, and it's one that's really important as to have a career in investment banking. Without that, you don't. But so I thought, how difficult this be? And like the first week I was there, it was very hierarchical in those days. The corporate finance teams sat on two floors, and then the managing directors or directors they sat on the special directors floor. So I got called up to the guy called Rory McNamara. Again, everyone knows seems to be dead, but anyway, Rory McNamara, who was just this amazing guy, and he could basically do a DCF in his head, and it was astonishing. Very bright guy. He went on to lead Lehman in Europe, build up Lehman in Europe really back in 1999, and took an entire team with him. A very smart bloke. So we were doing this deal to buy some quarries for Hansen, the conglomerate. And so I sat there, young associate, first week, I'm there with my vice president, and he said, all right, so we just need some comps, we need some precedent transactions, we need DCF. I went, yeah, sure, got it. So I went back to my desk, and I turned around to the guy sitting next to me, who's a very friend of mine, a guy called David Clarkson, and I said, David, what's a DCF? And so it's like he passed me this big, thick book, which still exists today. And he went, you really need to read this. But in the meanwhile, here's a DCF model. And of course, as I say, it's not a mistake. And it's, once you get it, then you get it. But yeah, so that was, I didn't know what comps were. I didn't know what present transactions were. And I certainly didn't know what a DCF was. So I had to get that into that very quickly. I think it's interesting. Again, another great friend of mine joined about 18 months after I did for Slaughter and May. He absolutely hated it. He hated it because when he was a star lawyer, he just retired and partner, one of the star partners, Slaughter and May, a guy called Jeff Twentyman. And he was like, I don't want to do all these grunty tasks you got to do. And, so it's like banking is great because, you're the client interaction, you're at the forefront of the deals. But, being a lawyer, you're given, especially if you've got talent, you're given, in the same way, I'm not saying I have talent, but I was given that opportunity on Williams. You're given these opportunities, really early on after you qualify. If the partner thinks you're good, you're going to go and do it, right? You're going to lead the call, you're going to, draft the document. And so he didn't. So when he came over, you have to do all the grunt work. And the problem is, which I always say to my guys, just, there's going to be some stuff, some crap you're going to have to do. And that's just, unfortunately, we call it the mundanity effect, right? There are mundane tasks in investment banking, whether you're an analyst or a managing director, you're just going to have to do. And so you just need to get over the mundanity, because the stuff on the other side of what you do on a day-to-day basis, thinking through with a client a strategy, thinking through a structure, thinking through a valuation, working with colleagues who bring different, different aspects to the deal. It's that's the fascinating bit, but you have to do a lot of mundanity. So you could say, well, you got to unlearn that. You're the star person in the room. You have to kind of knuckle down and get the basics right, and then take the basics and build on them. And you have to learn quickly how to be really collaborative with your colleagues, right? Because there's always someone who knows more about you. Might be more about a sector, might be more about ECM, might be more about M&A, but there's always someone who's been through those experiences that you can learn from. And whilst that applies to law, it applies much more to investment banking. And so learning how to collaborate with your colleagues and get the best from you and show the best to the client is really important. And although lawyers are, it's much easier for the lawyer to be the trusted advisor than it is for the investment banker. If you want to become that trusted advisor, then you've got to learn pretty quickly how to deliver the best possible product to the client all the time, because that way, you earn their trust rather, and you become that trusted advisor. And that's actually, it's a lot easier to do that when you're a lawyer, because what you say really matters. But with an investment banker, but yeah, that's the primary differences, I would say.
That's very insightful. And in terms of, because you mentioned a lot of people, you mentioned partners, you mentioned people that, would have worked side by side, on the desk, like right next to you. Were there any mentors you had early on, and how did they sort of change how you viewed banking or just helped you in the beginning?
Yeah, I was really lucky. And, I joined 1992. I'd worked in Hong Kong with Social Make. So I was like, I want to go back to Hong Kong. I want to go back to Hong Kong. And the guy and Morgan Graham from Deutsche Bank had been through the Guinness crisis, and they'd had to clear out a lot of the managing directors. And so the guys who ran the place, a guy called Justin Dowley and a guy called Guy Dawson, they weren't there. I think Guy was head of investment banking when he was like 32. I mean, it was nuts, but he was so talented, and Justin as well. And so so they were, they entrusted you to do stuff where they recognized you could do it. They didn't mind putting you in the forefront. They'd been put at the forefront, so you could be put at the forefront. And I said, right, I've been there like a year, and I was like, guys, I want to go back to Hong Kong, man, because I really liked it. It's like Hong Kong in the early 90s was a really fun place to be. And Justin said, you can't, and Guy said, you can't do that yet. So we got this joint venture in the US that does all our M&A, run by a guy called Eric Leach. I didn't know who that was. Like, who's Eric Leach? I don't know. Never heard of him. And in the same way, I'd never heard of a DCM. And Eric Leach invented M&A in the 70s when it was at Lehman, right? And these guys had a joint venture with Eric, and Eric did our M&A. And he said, just go and spend a week in New York. And, when you come back, we can talk about going to Hong Kong. I came back, and Justin always said it was the easiest negotiation he ever had in terms of determining their package to go and work in New York. So I had such a big smile on my face when I got back. So it was amazing. I've never been to New York. I've never been anywhere, but I've never been to New York. It was there were 6 partners. There were 25 people in the firm. They did great deals. Eric was a legend. He did work for Colgate, P&G, and Big Oil, Occidental. I mean, American Airlines. I mean, everyone, knew who he was and trusted him for these big deals, and and really to the great annoyance of the big M&A investment banks at the time, like Lazard and Morgan Stanley and Merrill Lynch. They used to get him. So Justin and Guy, they were really important to me, and Justin later as well when I went back to Merrill Lynch. And then Eric, working with Eric and his partners, most of whom were from Morgan Stanley, where Eric had come from, or from Lehman, where both which places he worked at, and they were brutal. They were really brutal, but you learned so much. But the work ethic was so different. So American investment banks had decided to come to London at the end of the 80s, beginning of the 90s, and we would turn up to presentations and we'd have sort of 6-page, well thought through piece of paper and portrait. They'd have 1,000 pages in landscape that analysed every company in the sector. I mean, United Biscuits were a big client. We were going to sell Terriers chocolate. We pitched against Morgan Stanley, and literally, I remember they had an analyst that just brought in the books because the board table reverberating because it was so. And I was like, so that should have showed me that when I went to America that things are going to be a bit different, and things were a lot different, right? They were we worked hard. Don't get me wrong, we worked hard in London, but we weren't nowhere near as hard as these guys. But you didn't mind it because you were just learning so much. Because Eric, there was no situation that Eric hadn't seen or his partners hadn't seen, and there was no, and the firm was so small that they had no choice. Our head of M&A here, John Heweiler, just moved on from head of M&A. Now, one of our senior vice chairman, he sat in the office next to me. I mean, and we spent a lot of time in those offices, but we just learned an awful lot. So Eric, and then when I moved, when Eric then sold himself and we became Deutsche Granville, and basically there was me, and I was a vice president, there was a managing director, and that was it. And we had a former COO of Morgan Stanley, a guy called Carter McClellan, and he was tasked to build an investment bank for Deutsche Bank in the US, not just M&A, but the entire thing, right? And he just grabbed me and he went, when you're not doing M&A, you're going to be working for me, and we're going to go and hire all these guys, and you're going to go and help me. And I was like, okay, sure. And I didn't really think he was serious, and he was deadly serious. And we went from a handful of people to being this massive investment bank in about 18 months. But a lot of that came from your next question, which was Frank. So a lot of that was down to Frank.
Yeah, no. How was it working with Frank? He's someone that I've tried to listen to a lot. Starting Catalyst and all. But how was it working with him? And what have you taken away from working?
He was astonishing. He is astonishing. Carter said to me, he said, right, we're going to hire Morgan Stanley's tech team. I sent this guy, he's a young VP, out to Silicon Valley about 10 years ago, and he's wandered around every garage, and he's handed out his Morgan Stanley business card. He was a vice president. Mm-hmm. And he said, I don't know what it is you're doing there. I'm not sure I understand it, but I'm Frank Patrone, and if you want money, I can raise money for you. If you want to buy something, if you want to sell, I can do all of that. And he spent 10 years with alternative tech companies. Tech was IBM was tech. That's I don't know who these guys are. That's not tech, and that's now tech, right? Those companies are now tech, right? And Frank was there, so he built up this business, Morgan Stanley, phenomenal revenue numbers, phenomenally profitable. And Carter said, right, if we're going to make a statement, we've done here, we've had, a bunch of MDs, that's great, built up an M&A team, that's great. He said, but we're going to go and hire the Morgan Stanley tech team. And I said, sure. He's like, for Frank. He went, no, we're going to hire all of them. And so we basically had all 98 of them. One associate stayed behind. I never worked that out. Morgan Stanley transferred the lease of their building to us in Palo Alto because they didn't need it, because they didn't have anyone to put in it, right? And we had Frank's entire global team. Deutsche Bank had been growing fairly rapidly, and there was, when investment banks grow rapidly, they have lots of different organizations, and making that cohesive is often quite hard. Because there's a lot of egos, you'd be shocked to hear, in investment banking. And so we had this MD offsite in Vienna, 1998, I want to say. And Frank came to speak. And Frank came with all these guys. And all Frank's guys, they had Versace suits on. They were like the real, It was a tech bubble. They were like smashing it. And everyone was like, "Oh my god, who are these guys? Who are these terrible people? Who are these terrible Americans?" This. And Frank spoke, and you couldn't hear a pin drop. It was so everything he said about interactions with clients and how you win a client, how you win a client's trust, and everyone. And there's a lot of very senior people in that room. No, it was not one of them. There was quite a junior MD, but they all looked. They no one said a word. They just listened to what he had to say, and that's Frank. And his ability, albeit went a bit wrong, but came back again, so he doesn't get. His ability to, and we've just done this. We've just sold dark trades jointly with Catalyst, right? We've done a joint advisory basis, and I was just reminded about they're Frank's just really good, and they just he's able to persuade a client that without him and his organization, then there probably isn't going to be a deal, and clients go, "Oh, that's Frank. Yeah, I probably need to listen to that." And it's because when he was a VP to when he was an MD, that's because all the people he dealt with, they didn't know what they were doing, right? Because they were in the garages making stuff, coding. They didn't know. So yeah, so that worked really well. So yeah, so I loved it. And he had some great guys. His head of M&A, George was amazing. Frank was, they were quite unique. That they got in a bit of trouble because they were a bit too unique, but that's okay.
That's amazing. I'm very jealous that you actually got to work with him, and because I've heard him so many times. I think recently I watched a podcast where he said his job was to sort of meet great innovators who didn't know how to run a business and make them successful, and that's a science, that's an art.
Exactly right. I remember him saying to me, he said, "I didn't know what they were doing. I didn't get it, but it's like whatever you need to do, money. You need money. You need debt. You need equity. You need M&A. Whatever you need to get sold, you need to buy whatever." And I'm just going, and he was so persistent, right? He just kept on going to see them. And when they moved from the garage to the first office, from their first office to a bigger office, and he was the one constant they'd seen. And all the other investment banks in Wall Street, in the main, there were some small boutiques, but all the other investment banks in Wall Street were like, "Oh, who are they? We got IBM. That's tech." It wasn't. It wasn't.
Yeah, no, I completely agree. So you've obviously witnessed private markets evolve significantly over when your career would have started and now. So what have you seen? What is the biggest changes that stand out to you from when you started and now today?
I think so. How has it evolved? So it's evolved. It's evolved in extraordinary ways, right? And there was a UK public company called Morgan Crucibles, now called Morgan Advanced Materials, and they had this business and they wanted to sell it, and maintenance repair, and you don't really know what it needs to do, but they made everything from lubricant spray to sleeping policemen, and the founder of TPG had just started, and they said, "We're TPG and we want to be in this business, and we want to buy this business." Like, no one's selling you. I've got all these, nice public companies, and so no one's selling to you guys. You take too long. You ask too many questions. This whole private equity thing. It's never going to take off. So that was the founder of TPG. He also did all right. So it was. But in those days, they were painful. I did some early deals with Simben when I was and Candover when I was selling stuff for Asda when they first became a client of the bank, and it was really painful, right? Because they didn't have a lot of capital, and they were really careful with it because they needed to make money out of it in order to raise more capital, which is obviously still true today, just in multiples of hundreds of thousands, if not millions, compared to what they had then. So now, it's it dominates everything, and obviously we've seen a lot of concerns around, well, certainly for 2 days, concerns around private debt and what that really means. But the size of the both on the equity side, on the debt side, but also in private markets as an exit route. So we're very fortunate here at Jefferies to have an amazing group that leads the market globally in terms of CVs, the continuation vehicles. Our private capital guys are an amazing team. You know, and the hundreds, you know, the hundreds of billions of business they're doing, you know, every year, right? And that has now become a viable exit for private equity, you know. So it's always requires, you know, you know, you have to sell, you have to do an IPO, right? Well, for a long time, you have to do an IPO. Right now, you have all these multiple opportunities, the private IPO, so, you know, selling, you know, increasingly, you know, the companies like Visma that's obviously just gone public, but, you know, basically was doing a private IPO for years. And it's a very innovative, we're very lucky to be at the center of it with what we do with our PCA guys. But the sheer scale of it and the sheer scale of you know, the dry powder on the equity side and the availability of debt on the debt side, you know, we don't do we do a lot of take privates, right? We've 14 deals on the screen this year, right? Out of the 29 that have been on the screen, and we are you know, there's not a private equity client of ours when we're on the buy side, you know, who's not, you know, going to those private credit funds. And it's not because they don't do as much due diligence, it's because they're so big and they're willing to be, you know, so aggressive on terms. And then you've still got the bank market, etc., the term loan B market. So, but yeah, no, the sheer scale of it is pretty amazing, and the innovation behind it continues all the time, right? And you've got some, you know, Mark Rowan, Apollo, who I knew when he ran private equity here for Apollo, you know, when I ran private equity M&A for Merrill Lynch in Europe in the early 2000s, you know, now CEO Apollo, you know, incredibly smart guy. You hear Mark talk. We're lucky to have him come and talk to our senior leadership group in January. Rich Handler, our CEO, interviewed him, and you know, it's just the way the man's mind works about what's the next opportunity, right? They're always iterating. So the scale and the iteration of the opportunities is what makes it, I think, so formidable today.
Yeah, that's really good to hear. And if we just, because you touched on your Rich Handler and Jefferies a little bit there, if we talk about culture, you're obviously in a leadership position at the firm. So how do you sort of think about shaping the culture and, you know, imbibing what you've learned within the analysts that join, or even, you know, above the ranks, associates, MDs?
Yeah, it's so important, right? It is that investment banks are run on teams, and if you don't embrace that, and if you don't embrace what each member of that team needs, and that's what I used to like when I went to the States, and especially when I went to Merrill Lynch, I'm not sure they wouldn't mind me saying. I will say anyway. Well, you know, analysts and associates, even VPs, they used to walk down the corridors like this, like with their heads down, right? You know, because, oh my God, an MD, and I was like, why do people behave like this? Like, these guys, we need these guys. And Eric had always said to me, you know, without the analysts, because Eric had very few associates. So why don't we have more associates? He said, I don't need those guys. If I've got the engine room and I treat that engine room well, and he did, he paid more than Goldman Sachs, he paid the highest man on the street, and he got the top 3 kids from Wharton or MIT or wherever it was, right, wherever he wanted. And these guys, they came and they worked their butts off. They often went to be really successful hedge fund managers and do other things outside investment banking. They were very, very smart guys. So if you've got that engine room and you treat the engine room right and with respect, then you can do anything, because in the end, that ability to crunch the analysis and do the numbers and give thoughtful advice to a client about the financial impacts of what they're going to do, that's so critical. So I've been brought up with this. You know, Warren Grenfell, Deutsche Bank was a team of, you know, 15, 20 people. Like, we had 4 teams. You know, when we built up Deutsche Bank M&A, which I went on to run in New York, you know, we started with 2 people. We put, you know, and I always say to the guys, you know, when you hire someone you like, right? You're going to be there at 3 o'clock in the morning with them, so you better not want to kill them at 3 o'clock in the morning. You know, so if a girl or a guy, you know, you need to get on with them. And so, you know, we always end up with teams where the team had the team, and I think that's been really important that we've built up the team here across, not just in my team in the UK and our investment banking team, but across Jefferies. That's very much an ethos, and you know, and you all follow Rich on Instagram. I know you do, because I do, and you know, and you see to Rich and also to his partner, to Brown Friedman, our president, it's so important, and it's not, and it's so, nothing else is, everything else is unacceptable. Any of those behaviors that used to exist in the 90s and early 2000s are unacceptable. But it's not that they're unacceptable. It's the fact that we embrace how to be acceptable in terms of respecting each other, respecting what to do. And it's back to my modality point, there's a lot of stuff to do, and not all of it's very interesting, and it takes a long time, and it means you're going to work very hard, and we need to understand, how people do. One of the greatest guys I ever met, a guy called Jason Arday, who was is autistic. I've got an autistic son, so I really resonate with Jason. He didn't speak till he was 18. He's a professor at Cambridge now, right? He's an amazing bloke, and he said to me, you know what? People don't do enough. People don't say how you do it and actually mean it, right? And that really resonated, and that sort of encapsulates how I think about culture. How are you doing today, right? But don't just ask, and it's just not a have a nice day throwaway comment, right? Ask it because you mean it. Ask it because you're going to do something about it. Most importantly, because people go through difficult times, and always maintain perspective, right? The hardest thing to do, whether professionally or personally, is to put yourself into the mind and what matters to the other person. And we have a great guy, again, John Amici is a psychologist, used to be an NBA player, and he comes and he talks to us, and he talks about leadership giants, and by which he means that the importance of the leader. He said, and I remember him saying to me, don't forget, they know your name, they know your kid's name, they know your dog's name, right? Because and I never, you just need to be reminded of those things, and reminded how important that each member of the team is, and you've got to build that respect upwards and downwards from every analyst to every managing director. And also you've got to have zero tolerance for when that doesn't happen, right? And you've got, and people make mistakes, so I'm not, and people say things they shouldn't do, or and especially when you're in a high stress environments, which you often are, investment banking. But you just got to, you've immediately got to say, right, guys, okay, let's resolve that. Let's move on. Giving feedback's really, really important. That not enough people give real-time feedback. I don't necessarily mean real time at 1 a.m. when things are going slightly wrong, but thoughtful, measured feedback. We take that very important. We've got one of my great MDs here, Paul Bundard, who looks after all our associates and analysts, sits down with them, and they're encouraged to talk very openly to them about what they like and what they don't like. I sit down together with my co-head now, Alex D'Souza, and we sit down with the associates. We go, right, okay, this is your chance, guys. If I walk out this room and none of you said anything, I'm going to assume everything's okay. And so it just takes one person, it's usually the same person, who says, actually, no, I've got you. And I think that and they'll vent their feelings. And I always say to the team, and to every team that I've ever had the responsibility for, I'm going to assume it's okay if you don't tell me it's not, right? And so you've got to come and say, look, and it doesn't matter. And it's like there's no such thing as a bad idea for a client. It's just an idea. Might be a rubbish idea, but you don't tell me, I don't know. And if you don't tell me that something's bugging you, and it might be a work thing, it might be a personal thing, it doesn't matter, then I don't know. And so just being that a culture of openness and the importance of team and respect for each other it's so important. And I don't want to ever see in the like a sort of Merrill, Lynch back in the late 90s, analysts and associates heads down, don't make eye contact with the MD. That's just nuts, man. That's no way to run an investment bank. And so yeah, that's really important to me, and always has been.
I couldn't agree more. I think the same applies to life in general, like communication, active listening, empathy.
Correct.
It's difficult when you actually enact it, but it's so simple at its true. You just need one person to sort of put their hand up and say, how are you? It actually does have a very big.
Yeah. How you doing? That's all it takes.
Yeah. And it's a very nice way of looking at it, because you see a lot of firms, I'm not going to name any, but you see a lot of firms that, have a mission value and like all of that stuff. And it has so many like buzzwords, but how do you actually enact that? It starts with actually giving time, creating that platform as you and Alex have, as you just mentioned, actually asking people that, how are you doing? It's very, I don't know, it's very nice, I think. And
Yeah, yeah, we used to have them, five of them carved into the wall at Merrill Lynch.
yeah.
So I'm not sure that people walk past them every day, but that's not the same as living them. And they were all good principles, but
Hmm.
you actually have to properly enact them and do them, and actions always speak louder than words when it comes to culture. And so
Yeah.
that's a really important part, and that goes all the way through with diversity, all the different aspects that we're very proud of our diversity DEI groups here at Jefferies, and J Able, which is the one I'm involved in, which is for people with difficulties, whether it's um, physical or mental, and how you encourage those people in the workplace. J Win, J Mosaic. These are really important things, and again, you can't just pay lip service to them. You actually have to embrace them and make them part of who you are and who we are, a team. And I think we get it. I think I get it right. Enough of the time. You better ask them outside. But
Next interview with the entire analyst floor.
yeah, exactly right. You better be sure.
Yeah. If we just shift over to M&A markets, what trends are you seeing today, and where do you think it's headed?
Look, I think as usual, there's been some hyperbole of excitement, right? Because they said, whatever it is, 400 billion rather of M&A announced, in 2 weeks. Like, EA Sports is 55 billion. So let's not get carried away, right? We've been through fortunately for us here in the UK team, so our team does all the public company work in the UK. Anything associated with a public company, we buy public companies, we sell public companies, we IPO them, we raise money for them, equity and debt, etc. But so that market, because of the way the UK market's been very, very vibrant in the last, 4 years, and private equity firms in particular have come and feasted on UK companies because they're very lowly rated and they're very high quality companies, and that's why you see so many P2Ps in the UK and so few IPOs. But obviously the interest rate environment, the Ukraine war, macro events, etc., that have really slowed down M&A. And then I think that there was a level of over exuberance with the change of administration in the US. Everyone thought, well, good times are back. Here we go. The floodgates are going to open in terms of the release of what have become, private equity portfolio companies that, instead of being sold after 3 years or 4 years or 5 years, and now 6 years. And, companies that were bought in 2020, 21, start of 22 at multiples that will never be seen again. And the whole system completely locked down at the same time, enormous amounts of dry powder. So I think that it's been tough, right, in those private markets. And I think we are now seeing, if you look at our pipeline, you've got Tarek Hussain and John Parker with our European M&A, and Jefferies has always, been driven by sponsor sell sides. So we dominate the sponsor sell side market. Sponsor sell sides combined with amazing sector guys. Those are our USPs on the investment banking side. We're a pure investment bank. We don't have a balance sheet. We don't have a, that's not how we win business. Just good advice backed by really high quality sector guys. And that's obviously resonated enormously with the mid-cap sponsors, and we've grown that up now to become to the large cap sponsors, and as the mid-cap sponsors grow bigger, so that it's all worked very well with us. But obviously, in when the markets are slower on that side, then we're impacted, as are the other global investment banks. But because it's such a core part of our business, and you talk to our heads of M&A, to John Tarrant, they'll tell you, we're really seeing momentum come back, because the worst thing about the divide between the ask between buyer and seller, that takes a long time to come down, right? So when I bought, if I'm the private equity firm and bought the tech company with no profitability in 2021, yeah, I kind of want that money back, and the realization that you're going to get it back at a lower multiple of your investment, and because private equity firms have to go out and raise new capital. To raise new capital, you have to return capital. Some firms, especially some of the bigger firms, like Carlisle have done an incredibly good job of that. Blackstone, great client of ours, great job of that. But you know, especially for these mid-market firms that, you know, did buy very heavily in those times, they have to make these realizations. And I think, you know, we all thought it was going to be last year, and then we thought it was going to be this year. And I think that now you're really seeing that wave is going to come. The leveraged finance market has never been better in terms of liquidity and both on the high yield side, private capital side. Obviously, that's made a massive difference again, and on the terminal B side. And so the debt's there for people. People can be more realistic about exit valuations. LPs want their money back. And so because private capital is such a big part of the M&A market, that coming back is going to be what drives it. And I think we see that coming back, you know, now, and it will really drive forward into next year. Then we thought it was going to be this year, but it wasn't. And you know, and so I think that's what everyone's pretty excited about. And you are seeing these big corporate deals, the EA Sports, right, of the world, and big corporations, you know, in media, especially in the US, right, doing big deals. And there's just a confidence. M&A is all about confidence, right? You know, people say, oh, why do corporates, why do private funds pay these high multiples? Because the answer is they feel so confident about what's going to happen, right? And for years they were right? Multiples always went up, profits always went up, debt didn't cost anything, so it was a lot easier to be right. And now it's harder to be right, and therefore, you know, when confidence comes back into the system, and you're seeing it in the stock market, especially in the US, obviously, which apparently will never ever go down in terms of a marketplace, and that confidence is what gives corporates confidence to go and pay, you know, buy things from private equity firms and other corporates to expand geographically, come here to the UK, come to Europe, come to Asia. And so, you know, you just got to be positioned. Obviously, we think we are very well positioned to take advantage of that. But yeah, we expect a big acceleration, which you started to see already, to be fair.
And if we look back at some of the M&A deals you've worked on, so I remember hearing about the Hauser Fraser transaction, that story. So are there any deals other than that, or even that you just think really stayed with you and are quite memorable in nature?
I've been really lucky in lots of respects, but especially when it comes to deals. And you know, when I was a first year MD, I was for Daimler when they bought Chrysler for $36 billion. It was the biggest deal ever. No one had ever seen anything like it. They sold it like 9 years later for considerably less. But you know, so I was lucky. You know, I had deals which I really enjoyed doing. I sold the Princess Luxury 5. I went through a period of doing lodging and gaming deals. Mm-hmm. That's amazing. You definitely want to be doing that. So I sold the 5-star Princess hotel chain to what's now Fairmont. So I went on every single due diligence trip myself. The Bermuda, Barbados, wow. Acapulco, Scottsdale. Those are good. Those are good days. And then I've been involved with a lot of, you know, brand. I've done a lot of retail deals. I've done a lot of brands here in the UK that everyone's heard of. You know, I sold Gondola Holdings. What's that? You know, Pizza Express is the answer. And you know, I bought Hit Entertainment, which is Thomas the Tank Engine and Buy the Dinosaur. So and those deals, and bizarrely, you become an expert in really odd things that you shouldn't really become an expert. My particular one is appliances, believe it or not. I sold a very large appliance manufacturer, or bought a large appliance manufacturer in the US. So I know more about appliances than anyone should do. I sold a garden centre business in Scandinavia, who knew they had such a thing, which was an amazing deal I did for EQT. And I've been very lucky to be associated with what a company called Constellation Automotive, which is British car auctions, which I, you know, driven by an amazing lady called Avril Palmer Lavery, who, you know, had a £30 million SPAC. I helped to buy a £1.2 billion company, which was back in 2015. And then, you know, she just drove that business. She sold it to a private equity firm in 2019 to TDR. She started Cinch. We raised £500 million for her to do that. She bought Marshall. Amazing, just amazing company, amazing lady. And so that's been great. And then just for some really innovative deals that, you know, I've been really lucky to be around. So yeah, I'm yeah, there's lots of good stuff. Lots of quite boring chemical deals as well, which I wouldn't follow you with, but also at different times, right? So I sold a business called Jury's Inns, which is like a Premier Lodge for Jury's Hotels. I sold it like literally a week before the banking system collapsed, and that for an amazing price, and then just no one could see it coming. A week later, you couldn't have sold it for a penny, and we sold it for an amazing price for an amazing client. Having gone through the cycles of M&A, you have different challenges. Things are great when things are great, and when things are tough, you have to be more innovative, and you have to think more, and you have to be a bit smarter than the next guy, and that's what we pride ourselves on teaching and helping the guys who work with us, that there's always a solution if you think hard enough, if you think smart enough, and you just need to be the person in the room that's thought hard enough about it and thought smart enough. But yeah, been very lucky in terms, and still am in terms of the deals I do. So we're still doing a lot of deals, which is good. So for things like contested takeover and hostile takeovers, we're doing one right now, contested takeover for so we got JTC for our client Bavaria, which is a great deal. We love a bit of contested takeover.
Is that very fun for you personally?
Yeah. I'm one of those boring people who really, really loves what I do. Probably to the exclusion of everything else, if you ask my wife and kids. But yeah, no, I love it. I get up every day and I love what I do, and that which is remarkable, and which I'm very lucky to do.
Yeah, I'm sure you're very grateful. And just by the way you've described everything, my next question was about what makes a good deal maker, but the way you've described what you do and what you've been doing for the last decades or so, I think calling you a deal maker, I'd rather call you like a partner, because I think you've partnered with these companies. You've been there. You have a relationship with them when they need something. So what makes a good advisory partner like yourself?
I look, it's really hard to be trusted by a client. It's really hard to be trusted by people, right, in life, but it's really hard to be trusted by a client. And I think what you've always got to remember, and I remember Guy Dawson told me this a long time ago, which is it'll take you years, months, years to build up that client relationship and build up that trust, and it will take you about 10 seconds to destroy it, right? And you can never forget that, right? And you must really respect and treasure it, and you must be really thoughtful about what you say. And again, it's putting yourself into the head of the person that's listening to the words you're saying. And if you can do that, and I by no means do it all the time, but I do it hopefully enough of the time, and you could understand their perspective, because as I always say, the thing which is why I'm if there's a physical meeting with a client and you dial in or now zoom in, you might as well not go in, because all it says to the client is, I had something better to do than be in the room with you, right? And it's things like that, right? Because what matters to a client is what matters to them, right? The most important thing today is what happened in one of their factories, or what happened with one of their works, or what happened with one of their products, right? And if you forget that, right, and you treat you're just thinking about the deal, then you're never going to get into the position of being a trusted advisor to a client, right? You've got to understand their perspective and what matters to them, and then you've got to do something about it, which is often quite harder. But if you can do that enough of the time, then you can build up those relationships. And once you have built those relationships, they last with you forever. But again, if you do the wrong thing, then the relationship disappears overnight. And so you just got to be really mindful of that.
Our first ever interview for the series that we're currently running was with Mark 80, and he said something very similar, that it takes really long to build that trust, but it can go away so quickly. And it's very nice to see that trust is that link,
Yeah, he taught me that. No, so I used to work with Mark, so yeah, he's a fantastic guy, a fantastic human being, as well as a fantastic professional. And one of people I really admire at Merrill Lynch, and he did an amazing job. He did an amazing job building up Moelis in Europe as well. Got a huge amount of respect for Mark, but he's exactly right.
Likewise, I have huge respect for him. We sort of spoke about the mundanity effect, and AI
Yes.
has been seen as this force that can come in and take that away. So, what do you sort of think about AI investment banking? And do you think, because I think, as you mentioned, it can actually be good to sort of get those analysts to go through that, that cruel work, because I think it sort of builds resilience as well. So, what do you think about AI in IB?
It does build resilience, but I'm very not when I hear people say, "Oh, when I was that age," I just
Mhm.
shut up, I don't care. That's like I work 27 hours a day. Who cares about right? Well, the resilience is important, but provided you're learning, right? And obviously when you're doing the day tasks, then you know you're not necessarily learning, except you want to stop doing them as soon as possible and pass them to the next person down. And that's probably the only thing you learn. But I think AI is going to it is going to be helpful in order to buy everyone time, from analysts, through to managing directors, the time to think, right? And that's the worst thing about being a very busy analyst or associate, even beyond that, right? You don't have time to think, and you've got to the best analysts are those that can do really good numbers, but also think that you've got to stop becoming a processor at some point in your career, whether it's of numbers or documents, and you've got to become a thinker. Otherwise, you don't progress, and that's why there aren't that many great investment bankers, right? Because most of them are really just processors, with the greatest respect to a lot of people. So I think that the beauty about AI is it potentially buys the opportunity for everyone to be able to think more about what think more have more ideas, generate more leads, build more relationships, think more about what the client wants to do, and to the extent they can do that, it's not without challenge. It really isn't, because you only want to teach one of those AI tools on the basis of the information you want it to see. And I think we're doing some great stuff. We have an amazing tech team here, our Madison team, and which is also doing its best to educate old people like me as to how it can potentially work. And we have a great, we have a video, a blog way of teaching, which is really innovative, and that they're smart guys. You see other firms doing it with smart ways, but the problem is that the tool has got to learn from a very specific set of parameters, right? Because if you let it out into the wide world, then you could, the contagion effect of the other things it might learn that just aren't the right things is really difficult. So I think everyone recognizes that it's coming. It's going to have more importance. Everyone, including us, wants to be ready for it. But what I hope it does most of all is it frees people up to actually think a bit more about what they do and the clients they do, and also hopefully have more free time, which would be good.
Yeah, it was good to see that it mainly affects time, which is again what everyone wants, out of investment banking.
Exactly.
If you could go back to, the Philip who was in Hong Kong in the early 90s, or the Philip who was at Cambridge, what would be one piece of advice you'd give him?
Never give up.
Mm-hmm.
Never give up. And if you want to do something, just keep on going and alienate fewer people. Mm-hmm. Because I think it's very easy, especially for people who are successful, I think it's very easy to become way too confident or cocky, and you just need to be a bit more thoughtful and reserved and respectful, and that's what I'd say to that person. That's
great. It's very nice to hear that now as well. It can help people at all ages, I think, but I think especially at a younger age, it has a lot more value. And with all the people you've worked with and people you've mentored over the decades, what is one thing you'd hope they would take away from working with you?
That's a good question.
Yeah, so
I hope that they would say, I hope first and foremost they'd say they enjoyed it.
Mm-hmm.
Even when times got tough. and I hope they would say that I gave them every opportunity that they could to succeed.
It's very nice. I think the enjoyment part is very important, but the opportunity thing is,
Yeah, the enjoyment part, you've got, I love what I do, but you've got to enjoy it. Because
yeah.
if you wake up in the morning and go, oh, I've got to go to work, that's not a good feeling for anyone, regardless of what you do.
I'm sure they have. I've just enjoyed this conversation so much. It's been really nice, and so
Well, thank you for having me on. And I
yeah.
really appreciate it. And hopefully it's I've said something that's helpful to someone.
No, I mean it has, and if it's okay, I'd just like to end with one last question that I also ask
Sure.
all guests. So along this journey, this decades long of working investment banking, that short stint in law as well. What has brought you the most fulfillment, both personally or even professionally?
Uh, I think I look back with great pride at some of the things I've achieved in some of the roles that I've had, in virtually all the roles I've had. I think that some of the some of the advice, I can think that I've, in the main, given good advice to clients and it's worked out for them.
Mm-hmm.
Sometimes not, but most times that's what I think is important. And then I think about my long-suffering family and which I haven't been there. I spent way too much time on a plane and not enough time with them. So I was very grateful for the fact that I could spend more time now. My daughter's about to have her first baby. That got married a couple of years ago. That's all great stuff. Fantastic son, as I say, he's autistic, but a super young man and a great daughter in New York. Who my long-suffering but amazing wife. So yeah, so the common, very proud of what I've achieved and continue to achieve professionally, but super proud of that.
That's amazing. I'm sure you're very grateful, and I'm very happy to hear that you've had a really good career and also your family's thrived. So congratulations,
Yeah,
especially.
it's not over yet. Still plenty years to go.
That's amazing, and congratulations on becoming a grandfather soon. So I'm sure you're very happy.
Thank you. I appreciate that.
Well, thank you very much. Really appreciate you making the time.
Great. Thank you.